Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at the mining stories I found most interesting this week. The gold price largely stayed flat for the first part of this week, but jumped on February 29th after the release of the latest personal consumption expenditures price index data. Core PCE, which excludes the more volatile food and energy categories, was up 0.4% month-on-month and 2.8% from the previous year. The PCE price index is the U.S. Federal Reserve's preferred gauge for inflation, and it's watched closely by experts who are looking for clues about when the central bank may start to lower interest rates. While the 2.8% year-on-year increase is the slowest since March 2021, the 0.4% month-on-month rise is the biggest since January 2023, and is quite a bit larger than December's uptick of 0.1%. The Fed's next meeting is scheduled to run from March 19th to 20th, and it now looks as though market participants are pricing in 3 rate cuts this year. Back in 2022, Canada ordered 3 Chinese investors to sell their stakes in Canadian critical metals companies. The move was geared at restricting foreign investment in this sector, but new research from the University of Alberta shows that the landscape hasn't exactly changed. In 2023, investors in China and Hong Kong made at least a dozen investments worth $2.2 billion in Canadian critical metals companies. That's up substantially from the $62 million seen in 2022. As TMX Group's Dean McPherson told Reuters, in reality, this source of capital isn't being blocked. Public perception of uranium saw another shift this week as Sweden made moves to lift its ban on uranium mining and exploration. The moratorium has been in place since May 2018, but now the country has started a government investigation that could see it reverse course. The inquiry will conclude on May 15th of this year. Executives at major nickel miners are sounding the alarm about the future of their businesses as cheap metal continues to flow from Indonesia. Bloomberg reported this week that about half the world's largest mines are unprofitable at current prices. Indonesia's output of low-grade nickel has increased rapidly, and innovations in processing have allowed it to be refined into higher-quality products. Meanwhile, economic weakness has dampened demand. Non-Indonesian miners have the advantage of producing greener nickel, but that hasn't boosted buying. I'll leave the links to these stories in the video description if you'd like to learn more. By the time you see this video, the investingnews.com team will be on the way to PDAC, which runs from March 3rd to 6th in Toronto. PDAC is always one of my highlights for the year, and I'm excited to be doing interviews with some of our most popular guests, including Rick Rule, Lobo Tigre, Adrian Day, Brian London, and more. If you're at PDAC, I'd love to say hello. We'll be filming on the 700 level of the convention center just outside room 714B. If you're not attending, stay tuned here on YouTube and find us on X at INN Resource as we post content from the show. That's all for this week. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.